Hello, everyone, and welcome to yet another episode of the Bharat Dialogues by News for Bharat. Bharat Dialogues is a flagship series of in depth video conversations where we sit with one to one with founders, innovators, game changers, and policymakers who are rewriting the rules of business in India. Every episode of Bharat Dialogue is designed to take you behind the success and into the thinking that made it possible. And today's topic of conversation is insurance. Insurance is something most of us know we should have, but millions of Indians remain either uninsured or underinsured. According to some recent industry estimates, life insurance penetrations in India are very well below in many developed economies, while general insurance penetration is still modest despite rapid digital growth. At the same time, India has set an ambitious national goal of insurance for all by 2047, a vision championed by the Insurance Regulatory and Development Authority of India. But amid all this innovation, one question remains constant. Can technology build trust, or is trust built by real people in person talks and a human connection? To explore these questions and delve deep into the insurance sector, we have with us Mr. Sameer Chibber, an independent consultant specializing in customer experience and enterprise process transformation with over 23 years of experience in leadership and over 20 years of experience in life insurance sector. He's a leader with deep expertise in underwriting, operations, governance, fraud risk management, and digital transformation. Throughout his career, Sameer has worked closely with managing directors, CEOs, board members, and executive leadership teams to transform this space and have taken meaningful initiatives. Welcome to the Bharat Dialogues, Mr. Sameer, and it's a pleasure to have you with us today.
Thank you. Thanks for having me, Srajan. Pleasure is all mine as well.
Thank you, sir. So, to begin with, my first question to you would be despite growing awareness, millions of Indians still don't have adequate insurance coverage. So, why do you think insurance remains a low priority for many people, especially beyond the metros in India?
Yeah, thanks for this question. And this is a very relevant question because our regulator also in India is, trying to ensure that all citizens of India are adequately covered by the year 2047.
Yeah,
Uh, to my mind, what the reason for this is primarily because of a lack of understanding of the insurance products.
yeah,
Uh, and this lack of understanding also stems from the fact that insurance typically has been a push product where it has been sold rather than purchased.
purchased.
Uh,
Yeah,
right. Also, the understanding of insurance in metros as compared to the non-metros, rural India or Bharat, as we say, is less, where the priority of the population even today is to meet their basic household needs and
yeah,
not to spend too much on insurance, etc. Uh, the families prioritize on food, education, healthcare, and livelihood over protection. Because of this, the benefits of insurance are not immediately visible. Another
yeah,
challenge is that the customers who have purchased insurance or who purchase insurance primarily purchase it from a tax saving perspective rather than from a protection of income and financial security
protection. Yeah,
perspective. So this perception is further compounded by limited financial literacy and occasional instances of mis-selling, which, to my extent, have eroded the trust in the you know trust in insurance. Third, and another important aspect to me that comes to my mind is the uh, complex nature of products. Uh,
yeah,
so if the insurance products can be simple to understand, as simple as the digital payments that we currently have, then I think the masses would also want to take more of insurance, or not more of
yeah,
insurance, but adequate insurance, and they will also understand it in a much better manner. And the
Yeah.
need for selling, the push sales that happens to an extent will be done away with, where and customers will opt for insurance on their own.
Yeah, that's very well explained, sir. And indeed, today buying insurance is a very complex task. So, currently in India, the regulator has been strongly pushing the vision, as we know, that the insurance for all by 2047. So, from your experience, what will take to move from simply insuring India to truly insuring Bharat?
Great. You know, this is my experience of having worked with both the distribution side as well as the servicing side
Yeah,
during my career. I think we need to have three important shifts. The first is the products must become simpler and affordable and
yeah,
relevant to local needs. Rural customers, gig workers, small entrepreneurs, and farmers require flexible solutions rather than one
yeah,
size fits all products. So
yeah,
currently, what happens is if one insurance company is coming up is pushing more for guaranteed products, the others will also ape, rather than trying to create another market for something unique or different
yeah,
for actually Bharat, uh, and most of the focus is on the metros. So this is one thing where if products can be made simpler, that will help. Second is distribution must become hyper local. Bank assurance
yeah,
is there. Common service centers have come up, but again, they need to be leveraged better. Digital platforms are there, micro insurance intermediaries are there, but again, they are limited to pockets. Micro insurers and digital platforms need to be pushed into the hinterland, and a lot of education around the uh, the advantages of having insurance needs to be spread
it's,
adequately in the hinterland. The third thing
yeah,
is customer servicing, and customer servicing has to become frictionless. Currently, what happens is a lot of times the customer servicing is more around the SOPs and not about the human touch. It is, and with digital servicing coming into prominence, everything is a yes or a no. At
yeah,
times, the human touch is done away with when we're talking about digital servicing. So,
yeah.
with digital servicing, we also have to ensure that the human touch is there. And with these three things, I think insurance for all can be achieved by 2047.
So when, as you just mentioned about the human touch and the technology part, selling the insurance. So currently, insurance fraud has become increasingly sophisticated over the years with the advent of AI and technology, and moreover like that. So how serious is this challenge today, and what kind of fraud are insurers most concerned about?
Okay. See, fraud has always been part of any financial product,
Yeah,
not only insurance. In insurance, however, the fraud has evolved significantly with digitalization.
yeah,
Technology, on one hand, has improved customer convenience, but it has also introduced new fraud vectors. Especially when it comes to life insurance today, we are concerned about several areas which are prone to fraud, vis-a-vis other type of insurance or financial
yeah,
products. And these areas are typically around identity fraud during onboarding stage when we are getting new customers onboarded, uh, generation of synthetic identities to mask the actual identities of customers, document
yeah.
forgery for getting higher sum assured, or things like that. Medical underwriting fraud is again a very common fraud.
Very,
Premium financing fraud is another type of fraud. early claims fraud, where wrong claims are logged, uh, and they're trying to defraud the insurance companies. Then there is an agent collusion that happens, and can lead to serious financial repercussions for insurance companies. Digital impersonation and phishing is another common fraud that is happening. And to top it up, money laundering, which has been
Yeah.
a big issue in the past, is currently also an issue. Money laundering through insurance products, and from an operational standpoint, and uh, you know but from a typically from an insurance point of view, fraud management can no longer rely solely on post-event investigations. So previously, what was happening is, once an event happened, investigations used to try and figure out how things happened, and then we used to go ahead and try and get the money that was
Yeah.
fraudulently taken back into our books. But that is no more the case. Fraud prevention has moved into preventive controls. Uh, AI definitely is helping, um, and there are robust mechanisms around KYC, know your customer, anti-money laundering, and continuous transaction surveillance, which is happening. Alternatively, IRDA has also rightly strengthened governance expectations around fraud risk management, customer due
Yeah.
diligence, and operational controls. The industry's objectives should be early detection right now rather than post loss recovery. And I think the industry is already moving in this direction, or has already moved into this direction.
Yeah. That's very well explained, sir. So, as we know, sir, technology is rapidly changing in the insurance landscape. So, how is AI and data analytics helping insurers strengthen their underwriting while making the process more quicker and more customer friendly?
Sure, Sajan. See, technology has been a boon for underwriting, uh, where it has previously underwriting was predominantly rule-based process, and
Yeah.
a lot of it was driven by mobility and mobility tables, etc. However, today insurers have integrated multiple data sources, including medical history, financial information, behavioral indicators, and digital footprints, to develop
Yeah.
more accurate risk assessments. With this enablement, several improvements have happened, where underwriting decisions are faster. Now, if there are over-the-counter products, insurance products, we can issue those products in, say, 10 minutes from login to policy generation. So, in underwriting decision has become that fast. We have better risk segmentation. uh,
Yeah.
Previously, segmentation of the customer profiling, or the customer profiling, was manual in nature. It was error prone also, but with AI, better risk segmentation has happened. This also helps us improve our decision making abilities in underwriting. This has reduced manual interventions, where if I was a junior underwriter, I used to wait for my senior to have a look at a particular case. Now everything is decided with the system because of
Yeah.
inbuilt algorithms, and that takes care of a lot of to and fro that was happening in the past. Then there are improved straight-through processing tools, where integration of KYC, AML, etc. is there, and things just happen on the fly. This
Yeah.
also, because the to and fro has reduced, of course, it has a positive impact on the operational costs, which have come down, and fraud detection has been enhanced. However, at the
Yeah.
same time, customers benefit from quicker decisions, simplified documentation, and improved transparency. So there was a time, Sachin, when a particular case was in the underwriting bucket, then used to move back to sales, then used to come back to underwriting three, four times
Yeah.
for lack of proper documentation. But now, with automation, things just happen in seconds, and
Exactly.
the customer is upfront told what is required, and once those requirements are there, the case gets decisioned. So the to and fro, the customer experience, which would go down because of this to and fro, has has been taken care of drastically. However, I would just want to highlight one thing, that AI should
Yeah.
not augment underwriters rather than
Mm.
in fact AI should just augment underwriting and it should not replace underwriting, because complex
Yeah.
cases still require experienced human judgment, particularly where medical or financial nuances exist.
Okay. So, sir, I have seen a concern that people often have is like whether automation and AI could make insurance less personal. So, how do insurers strike the right balance between the digital efficiency and the human touch?
Uh, this is a difficult one. This actually is a difficult one. See, technology should help in removing complexity and not human
Yeah.
empathy, is my understanding. Insurance, by virtue of what we are promising to the customer, involves a lot of human empathy. Uh, so that has to be there. Now, routine transactions such as policy servicing, or transactions which we call as non-financial transactions, those can definitely be moved into processing through technology, and most of the insurance companies have already moved to that level of automation. However, there
Okay.
are things where such as say claims which come in, critical illness or financial hardships that the customer would be facing. These can't be automated from a processing perspective.
Yeah.
That's where the human element comes in, and that is the time where insurance as a product, the confidence of the customer in that insurance product that he or she has purchased is established or broken for generations. And
Yeah.
that's where human empathy has to step in, and automation should be kept away from claim settlements, etc. uh, Also, in my opinion, I think the future operating model should be digital first always. Um, at the same time, it has to be with human empathy. Uh, to ensure that this balance is maintained, the customer should be able to self-service when they choose to, while having seamless access to knowledgeable advisors wherever reassurance or complex guidance is needed. The best customer experience combines operational efficiency with emotional intelligence. And any system, any digital footprint which is doing away with the emotional intelligence part, I think will eventually fail, because everything will be too machine driven, and customers
Yeah.
will start losing trust in that particular brand.
Yeah, that's true, sir. So, sir, as we know, you have worked closely in the operations with governance and digital transformation. So, what do you think will be the biggest game-changing technology for the life insurance sector in the coming 5 years?
Okay, I think in the coming 5 years, it's going to be more about how easily we can onboard customers, and a lot of work by various insurance companies have already happened. A lot of fintechs are in
Yeah.
place who've actually invested both time, money, and thought in developing systems which can seriously ensure frictionless onboarding of customers. That's one side.
Yeah.
Second intervention is definitely around the training of the intermediaries. uh, Training of intermediaries is very very important, because going forward, uh, the expectation that the sale has happened, and then the intermediary is nowhere to be seen. It is the insurance company and the insurer who has to communicate. I think that has to be done away with, and technology has to ensure that the intermediary can be contacted, the intermediary can be is properly adequately equipped with the product
Yeah.
knowledge to help the customer understand what product he or she has purchased at each life stage. So there are products which help a person when he's a student. The same product can have features, or when that person gets married, and the same
Yeah.
customer can be upsold a new product when he or she has kids. So the intermediaries need to know when to approach, how to approach, and they need to be adequately equipped with product knowledge and the required infrastructure. The third and the most important is the moment of truth related technology intervention, where a claim has to be paid. It could either be an early claim, an early death claim, or a payout that is happening because of maturity, etc., of the product. That has to be, realistically, the turnaround times have been brought down drastically by the industry, but there are ways and means of further reducing it and improving the overall experience for the end customers. So I think technology has to be um, developed around all these three legs: onboarding, the intermediary education, and also for the at the payout stage.
Okay. That's greatly explained, sir. And as we conclude, as we are close to the end of the session, so it is clear that after interacting with you, that a universal insurance coverage will surely require collaboration between insurers, regulators, technology providers, and customers themselves. So it is a shared responsibility that extends beyond business to nation building. So, sir, my last
Mhm.
question to you would be, if you had to leave our audience with one message, what should insurance regulators and customers collectively do to ensure that insurance should reach every household across Bharat, not just as a financial product, but as a financial necessity? So, what it would be?
See, my understanding is insurance is ultimately a social promise and not only a financial product.
Yeah,
For insurers, the responsibility is to make insurance simple, transparent, and accessible. For a regulator, it is about continuous focus on customer protection, innovation, financial inclusion, and digital infrastructure. And for
yeah,
the customer, insurance should be viewed not as an expense, but as an investment in their family's financial resilience. If all three
yeah.
stakeholders work together with trust, technology, and customer centricity at the core, I think the vision of insurance for all by 2047 will become a reality. The true measure
Yeah.
of success will not be the number of policies issued, but the number of families whose financial future remains secure because insurance
Secured. Yeah.
fulfilled its promise when they needed the
Yeah.
most.
Yeah. So thank you for explaining this well, sir. And it was a pleasure to have you on this series today at News for Bharat. And I'm really happy to have you on board for this
Thank you.
series.
Thank you, Sajan. Nice interacting with you, and thanks for having me once again. And giving me this platform to share my thoughts. Thank you.
Thank you, and looking forward to more collaborations.
Same here. Thanks.
Thank you. Thank you.